Good afternoon, everyone. Welcome to today's weekly market insights. Now, as we come across to the calendar, have a look at what went on this week. We can see the central bank that was out this week was the Bank of Japan. Now, I'm going to be honest, I don't read too much into what the Bank of Japan say. To be fair, I mean, they're kind of powerless to influence the price of the yen. So we can do our research into that. I personally think it's a little bit of a waste of time unless you get some headlines that they've actually done something quite serious. So going to skip over that a little bit and move on to the closer to home stuff, more important stuff for the people of the UK. We had a pretty busy calendar in terms of the Bank of England's thinking going forward. We had the claim account change and unemployment rate. That is the labour market figures out of the UK, and we also had inflation figures out of the UK, as well as a speech from the Bank of England's Governor Andrew Bailey. Now, as we come across to the claim account change, a drop of 43.3 thousand claims, similar to the jobless claims figures out of America. Last month's was down 95,000. This month's down 43,000. Again, less from the previous month. So it's still on a downward trend, lower, albeit it didn't decrease as much as last month, but still positive numbers all the same. Come across the unemployment rate dropping from 4.2% down to 4.1%, which again is positive for your for the people of the UK. It shows more people are getting back into work, which is positive for the country. In terms of monetary policy, if more people get back into work, more people have money to spend, and then the economy grows faster. So definitely something the Bank of England will have to think of going forward in their discussions of rate hikes. We come to Wednesday, 7 a.m. on Wednesday. We had inflation again out of the UK, strongest figure for many years out of the UK, above 5%, nearly 5.5%. So with employment slowly getting back to pre-pandemic levels, with inflation as high as 5.5% or 5.4%. Sorry, highest in many years. It's definitely going to weigh into the Bank of England's thinking when it comes to future monetary policy adjustments and the potential for rate hikes throughout the rest of this year. Inflation again strong out of Germany. Inflation out of Germany, similar, highest numbers in a long time. Was equal to the previous month. We didn't increase, we didn't decrease. It just remains highly elevated, and the ECB are definitely going to have to take that into consideration moving forward. Even though they are one of the more dovish central banks out of the G8, if inflation persists at that speed, they're kind of powerless to not adjust monetary policy. But we will cross that bridge when it comes to it. For now, they seem to be holding firm in their dovish stance. As we come across to the Bank of Canada's metric of inflation, again, inflation strong, inflation out of Canada. Yeah, it's not really news seeing high inflation figures. It's not going to really jolt markets in either way, because markets are kind of expecting high inflation. The big surprise would become if we had a miss on inflation of any of these figures. We had a downbeat inflation number. That would probably cause some surprise in markets, and you may get a bigger move off that. Strong employment figures out of Australia, the high impact data out of Australia this week, which brings us on to also the PBOC, the People's Bank of China. Their interest rate decision, they cut the interest rate by 0.1%. As we can see, they reduced their mortgage rate, the rate in which they charge for mortgages. So a couple of things the Bank of China, People's Bank of China, have done over this week to help boost the economy that is struggling a bit with the restrictions around COVID that they've introduced, and supply chain disruptions coming off the back of that. So the central bank taking steps to try and boost the economy. In terms of the calendar, we'll come across the markets, and we will have a look at what's going on across charts. Now, the bigger kind of news this week came out of the biggest kind of news out of the charts, was having a look at the S&P. Now, if we have a look at the S&P, I still have a couple of drawings that I had on, my bad. Have a look at the S&P. It's continued its downward trend, put down to the fact that the Fed are going to look to hike interest rates, certainly 3 times this year, potentially 4. Remains to be seen how much, but with the S&P falling, if the Fed go on a cycle of hiking interest rates, that is not positive for stocks. Positive for bond yields. We have seen a bit of a pullback. We did see, if we just looked at the charts, we can see this little head and shoulders. We have a nice little left shoulder, head, right shoulder, and then which indicated reverse. We got a break through the neckline, and we have moved lower since then. Does it change the trend? Not yet. We're still making higher highs and higher lows. The bias is still tilted upwards. Certainly long term, you'd expect the bias to tilt upwards, but we have had a slight pullback, which has not resulted in a pullback in indices. So that's something that a pullback in indices, it has not reduced in a pullback from the downtrend, which would be a rally in indices that should produce. So definitely something that we can take note of. Yields falling, indices don't budge. It's definitely something we can look to. We'll look to keep in the back of our minds moving forward. The uptrend in oil continues. OPEC still standing firm, not increasing supply as much as maybe is needed, and with oil demand reaching pre-pandemic levels, the uptrend has now continued. We've had a pretty strong assault higher. We have had a bit of a pullback now into lower highs and lower lows. So a correction was due. A correction was due coming into the weekend. Potentially some profit taking into the weekend. Remains to be seen how that continues going forward. The US dollar has, in the back end of this week, continued its downtrend, dating back towards since May of last year. We've really been in the downtrend. We did have this across here, consolidation, a little bit of a pullback, a little bit of a relief, but we have since, over the back end of this week, or over this week really, we have resumed this downtrend in euro dollar and uptrend in the dollar index. So that remains a large focus of our attention moving forward, to try and look potentially to take advantage of some central bank divergence continuing. As we come back to the calendar, we're going to change this over to next week. And have a look at what's coming up next week. We're pretty busy economic calendar next week. In terms of European session data, not so much, but on Monday we've got some PMIs out of Germany, Europe and the UK. We've got some inflation figures on Tuesday out of Australia, which means we've a free run in terms of no economic calendar, no high impact data releases throughout the day on Tuesday, throughout the late European session, and throughout the rest of the European session and American session on Monday. Wednesday, pretty busy day. We've got the Bank of Canada as well as the Fed, which is the main focus of attention next week. We've not got any economic projections. We're not getting any new dot plot, anything like that. What we are going to look for is the rhetoric surrounding the monetary policy statement and whatever Jerome Powell has to say for himself in the press conference. Kiwi inflation, Q4 inflation for last year, we'll get a good indication of how that's going, and then a bit of data out on Thursday out of the US. We'll have a look at that as well. And then Friday, absolutely nothing. So yeah, pretty busy economic calendar next week, but nothing too severe. So we will look to try and take advantage of a couple of them, and that can open the door as well for some technical trading and also some cross asset correlations, which can provide some pretty good opportunities. So we'll look forward to that next week. Another good week of trading next week, good week of trading this week, and so Friday. Everyone enjoy your weekend. Try and switch off from markets. Try and get a bit of rest and relaxation, ready for another week of trading next week. So that's all from us this afternoon. Please do join us at the same time next week for another weekly market insights. Thank you.